Good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at the market today on the 11th of June, Wednesday here. First of all, though, before we take a look at price action and the charts, we, of course, will go through this PowerPoint quickly that explains the strategy focus today of trading intraday and intra-week strategies. Good morning, Vikantas. Good to see you. So first of all, the disclaimer here, this material is developed for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Alrighty, then of course the risks involved in trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with the disclaimer and the content mentioned here. All right, thank you for your attention. So in this session, we're going to take a look at this basically checklist as always, but we'll have a bit different twist because we'll be specifically looking at the strategy using moving averages, but we can still use this checklist of trend. We want to see a trend, basically, opportunities and filters, triggers, and entry methods clearly defined in the checklist and trading plan so that basically traders avoid trading at moments that seem interesting but do not actually match their trading plan. We always want to keep aware that our trading plan is aligned with the market, or market conditions are actually what we want to see in our trading plan. What we want to avoid specifically is that we're jumping in the trade just because price is moving. Interestingly, we want to only take a trade when everything matches up. So what is the specifics we'll be using in this strategy webinar? We'll be looking at the trend using the moving averages. We'll use 13 and 34 EMA on the 1 hour. And we want to see those in the same direction. Then actually this is you can do the same for the 15-minute, by the way, but primarily will be the hourly. The opportunity would be when the 21 and 34 EMA are aligned. Actually, that's should be 13. Let me change that quickly before we continue. All right, so 13, we want them to be aligned in one direction. Just because they're both bullish, for instance, is not enough. We want them to be, the shorter one above the longer one, the 13 above the 34 in an upside. Then we're looking for filters. What could block the trade from materializing? So for instance, divergence. For instance, if there's a daily pivot point close by, or if the Camarilla levels, range levels have not been broken as yet, or if there's not enough space to those levels. News events, those are all things that could filter out trades. Filters are basically setups where we don't get, we don't expect enough follow through for those setups just because of these things that they're going on. So we want to be cautious with those particular setups. Triggers, basically when we have a trend in play and there's opportunity, then what are we looking for before a trader could think, okay, this is getting very interesting. When am I close to pushing the button and entering a trade? And in this case, we want to see price clear support or resistance and create sufficient R2R space. And we'll be looking at relative strength and accuracy correlations. The entry could be the break of the fractal or the retest after a break. The retest after break is always, the advantage of maybe getting, avoiding the false break in a way. Trade management depends, but roughly 6 pips under each bottom or top. If that, it takes too long, because that could take still quite a while before the market gives a top or bottom to trail stop, to use that trail stop, in fact. Other things I use are parabolic, or if the candlesticks on a 50-minute chart are showing the opposite direction. Let's say we have higher highs and higher lows, and all of a sudden we have a lower low, lower high. That could be a reason to change as well. Depends how tight you want to trail stop it. If using tops and bottoms can mean that the trade will take long to develop. So it depends on how much time you have to trade. If you only have, let's say, a bit shorter time, then using the candlesticks is a bit better. Alrighty, take a look at the admiral markets in social media. And with that said, let's take a quick look at the Forex calendar. I think we have Kiwi interest rate decision in 15 hours from now. Otherwise, only some light news. Oh no, wait, we have the pound claimant account change again. The typical pound news at 9:30 a.m. British summertime. Otherwise, lighter news throughout the day, medium and light impacts. Euro dollar. Definitely very bearish moving averages. So what we got here, I'm looking for the L3 is right at the bottom here at 135.27. And the H3 is at 135.65. We got pivots above us. Looking like a bearish day. So to me, shorting around the daily R1 right at this resistance here, just before we get the breakout to the upside, that could be interesting. Even shorting around daily pivot and H3. Those could be all interesting potential shorts. Now, the one thing I don't like potentially about the whole setup is that we did bounce off the 88.6 fib yesterday, right here. And although we have a lot of bearish momentum, we had a harami right at the 886 fib. Anyone who was trading the Asian session might have liked that one. That was a few hours ago, 4 hours ago or something like that. So that was a good bounce. A harami right at the 886 fib, obviously a very strong potential for a bounce. With the stop loss just below the harami or even below this bottom, you could have a big potential with that trade. So maybe some of you took that one. If not, that's no problem, but just saying, how you can look at the charts to identify support or resistance and candlesticks confirming that. We had a daily S1-2 here and L3 all at that 88.6 fib. So not surprising we got a bounce there. Downside, therefore, I'm a bit skeptical because of the fact that price has, is at such a big support level as this 135. 135 is a round psychological number as well, and we had a big bounce on the intraday day that basically made engulfing twins on the daily. This is bullish engulfing twins. You can see it here. It's even saying it. The indicator is saying it as well. I mean, we can see it ourselves, but clearly engulfing. On top of that, the weekly chart is showing a pin bar 2 right there. So, in that regard, clear signals of support at 135, if you look at the weekly candle at least, and the daily candles. So looking at price action, strong bullish signals last week. This week, obviously, we have a lot of momentum to the downside so far. That you can definitely see on the hourly. Huge widening gap of the moving averages to the downside. But this is one that I would be careful of to the downside and would filter out. We're trying to trade the momentum. This strategy is based, the concept of this strategy is based on momentum. Always keep that in mind. It's good to know the strategy beyond the rules. It's good to know the strategy kind of like from a more conceptual point of view. Why is it created? What is the goal behind it? What is it trying to do? Besides only looking at the rules. That way, you have a bit more discretionary feeling for it, a bit more, it goes further than, your vision goes further than just looking for A or B or C. You kind of like see through the charts in a way. So the vision is that we're looking for momentum, and the momentum is down, but because of the fact that price is actually so close to support, I would be careful with that downside and therefore not trade it personally. It might be different though if price makes a sturdy retracement, but that's not a momentum trade anymore. If price gets up to the daily R1 and the 50 fib here, that's actually the opposite fib. 1 second. Sorry. Well, yeah, if price gets up to the daily R1 or that's also the ATR projected high of the day, 135.93. That could be, and the weekly pivot, that could all be resistance spots maybe, for that euro dollar. Otherwise, the upside is against the momentum, because if you look at the momentum, as I said, the moving averages are clearly down. The upside is a counter trend or counter momentum trade, and therefore I wouldn't be interested in either. So because the strategy is only forward momentum, that has been filtered out because support is close to buy, and the opposite, the upside potential, is also filtered out because the momentum is down. So both sides, as you can see, don't match up. One doesn't match up because the support is close by. The other one is because it's against the momentum. Right? But from a discretionary point of view, if we get a good price action signal, a good daily wick, a good hourly wick, I don't know, the shooting star, for instance, like a shooting star like this, right in this level here, it could be worth it for some pips to the downside. But that's not a moving average trade, right? That's actually something different. Okay? So I hope that makes sense. If you have any questions, let me know. Pound dollar had two haramis to the opposite side. Yesterday had a kind of like a hammer. It says a harami. Anyhow, whatever it is, it was a bullish signal earlier in the Asian session as well, and about an hour ago. So we are getting some bullish upside here. Price action is showing reverse, but the moving averages are showing downside. Yesterday we had an interesting break of this trend line for some downside. So that would be interesting. That was an interesting trade. Sorry. Now it's going to be interesting to see how far this can bounce up. Let's take a look at the 4-hour. From a discretionary point of view, yesterday we had this trend line on, right? Because we're looking at trend line trading. It's going to be interesting to see if price can box its way out of that, like this. Anyhow, for our strategy point of view, actually, the moving averages are still to the downside, or at least downside aligned. But actually, the 13 EMA is getting a bullish angle. So there's a mix there, right? We want to see both, either bullish or bearish, and aligned. That's when we have momentum. If they're aligned like this, but one is bullish and one is bearish, then it's not fully aligned. That's not what we want. And the reason is that 15, I want the 1 hour and 15. And you can see why, because the 15 is slowly but surely showing some upside. Now, that upside, as I said, also it's not aligned here to, first of all, the hourly. Second of all, even the 50-minute is not really aligned as yet. We're getting the crossover now. Third of all, actually, we have a lot of pivot points, like the weekly and daily pivot point, right above us. So that would be a strong potential of a resistance. We don't know if that is true. We can look for price action candlesticks at these resistances, for instance, but that's a different strategy. Yesterday we had a good momentum breakout to the downside here. That's what we're looking for. Something like this, right there, where I have the red circle. So that's the prime example that we're looking for. Now we just don't have it right now, right here. AUD, slowly but surely moving up. This is what we're looking for. Also, because everything is aligned. In most cases, we had some touch and go into 13 EMA, but roughly speaking, throughout this upside, we've had good bullish moving averages. From the 4th of June, already a week ago, 1 week, we're in this upside mode. So let's see, we have the upside mode again. Yesterday, actually, we had a bounce right here. Let me show you in the New York afternoon. That's a trade I took, but it didn't go all too far before we got a shooting star and some downside. So that's why I exited for a small profit here. So that was based on this momentum strategy right there, but it just didn't go too far before we hit that resistance. Later on today, we still got some upside, but that was more through Asian session that we got this renewed. But anyhow, it wasn't really a big move up again either. AUD/USD is moving up, but very shallowly, very small ups and downs. So that is a bit difficult with this AUD/USD. All right, 1 second, folks. So let's see. 50-minute chart. Now that we have the hourly aligned, we're looking for the 50-minute to be aligned as well. And that is so. So that's good. Then what I'm looking for is a break of resistance, which we have here. One could consider that already a break, although we didn't get some sustainable break. It's just like a poke through H3. It might be worth considering, though, if we get another break of this one, for instance, and then a hook back like that, and we get some more momentum, I would say. You know, the overall choppiness of the AUD/USD is a bit concerning about how far the break could go. Let's see. The R2 is about 94.08. I think that would be a realistic target. ATR, projected high, is also pretty close by. And the H5 is just a bit higher. So those are probably logical places where today's price action could go to. While the pivots are below it. Four-hour candle is getting squared up or retraced. Take a look at the 5-minute here. Yeah, we're definitely in a bullish mode, but the question is, what do we want to wait for? What we're actually waiting for, preferably, is price to. Yeah, this could be it. You know, this could be already a signal here right now. Just considering if we got a break of this high here. Let's see. These tops already. This could be a pullback. What we're actually looking for now is a renewed break. I'm just trying to see what the rules are actually of this strategy and see if it fits right here, or actually we have to wait for this top, because let me go to the hourly. Yeah, this was a breakout earlier today. That would have been a typical breakout about 4 hours ago, I think. No, 6 hours ago, even 5 hours ago. So that was in the Asian session. If you're trading the Asian session and you saw the break of these tops, for instance, with these bullish aligned moving averages and the hourly also aligned, let me check if that is true. Yeah. Then you could take an entry right there, right here, and you can trail stop it. Either if you use the candle lows, for instance, you would be exiting right here for neat, it's not a lot, but it's about 14 pips profit. The risk would have been around also 14. So it's not a great trade, but still 1-to-1. That trade is behind us. So in fact, we would need to wait for a break of this top again. A break and a pullback and then a bounce here. That's the preferred method probably at the moment. Although the break itself could be interesting as well. It is getting pretty close to the ATR if we take that breakout. So that would be my preferred method. Wait for the break again, wait for a small hook back, and wait for the bounce. What is the bounce right here? A close, when you have candles going negatively like this, right? Wait for a close above the candle that has a high. What do I mean with that? Let's take an example. Here, for instance. right? That's a pullback. Let's go to that one. Oh, I lost it. 1 second. Here. Here. We got a break, right? We got the pullback. So what? The break of this high, we got a pullback, right? That's what we're waiting for. Break, pullback. So what is the continuation? Basically, we got bearish candles, right? If you look at these candles, this is bear, this is bear, this is bear, this is bear. And then we get, all of a sudden, what are bearish candles? Lower lows and lower highs, right? We got lower lows and lower highs each candle. Do you see that? What do we get the candle after that? We got the first higher, higher, and higher low, and a close, primarily very important too, above the lowest candle. Right there. So when you get a close above that candle, the high of that candle, because we have a bearish retracement, that's the key, right? That's when you get the confirmation of the bounce. Now it still takes a bit of sideways movement before you really get follow through. But if you're looking for, trading if you don't want to trade the break, but you want to trade the bounce, the continuation, let's say, this is one way of doing that. It's not the only way, but this is one way of doing that. Right? So break, pull back, and go. So I hope that's clear. If you have questions, let me know. But it's a powerful concept, so it might be good to look into that and use it whenever it suits you. Alrighty, so that's what I mean with that. So let's see if we get that. This itself already could be a bouncing spot, as I said, but wouldn't meet the criteria of the strategy. It's looking for a break, first of all. So Kiwi. Bullish moving averages, but it's already at the daily R2. It's already had a substantial upside, in fact. Yeah, so we have to wait for a new environment here. We can still take a look. Yeah, it's daily pivot point, maybe a price action bounce off that could be still a good bouncing spot for upside, right? The daily pivot and the L3, but that's still a very long way from price at the moment. I would not be that interested in the Kiwi. Bearish price action, but bullish momentum, and also price is pretty close to resistance at the moment. So that doesn't line up. We need bullish momentum, or we need bearish or bullish, we need momentum in general, but we don't want it to be too close to the targets. Otherwise, it doesn't make sense, right? So we want momentum at a spot where we can still expect some potential that day. Dollar CAD. Bearish momentum and prices going against it. So that's simple too, isn't it? It's not always very complicated to look at it. If you just see this, it's already very simple because it's not on our list. Bearish momentum, but prices are going against it. So it becomes pretty simple. That's, I guess, also the usefulness of that. And weekly and daily pivot points above us. So maybe we're going back to resistance. That would make a lot of sense. But price also bounced off the monthly pivot point. So I don't know. It looks a bit mixture here on this CAD. I'm not a particular big fan of this CAD at the moment. If we do get rejection off that, that could be a price action pattern, potentially at the weekly and daily pivot. But in that regard, I would be not a. With regard to the moving averages, it's definitely not something to look for. Regarding to pivot points and price action, there could be something here at this level, but it's not a grand scenario at the moment. Dollar yen does have bearishly aligned moving averages. One of them is flat, though. 50-minute chart. I do think, though, considering the fact that they're still bearishly aligned, there's maybe still a decent chance of downside today. So we could look for a break below the L3 here. A break, pull back and go, for instance. That would be still maybe some potential on the dollar yen. Let me write that on my watch list. I didn't have that actually on it, so let me do that right now. Dollar yen, odd USD so far, and that's about it. Or was it pound too? No. Euro yen. Euro yen has bearish moving averages, or it will have at the end of this hour, probably. If you look at the moving averages here, it's still flat, but if we get a good bearish candle, that will twist this into a bearish momentum. $50-minute chart, close to getting it as well. So I would say a break below this L3 could be very interesting here. Break, pull back and go for downside to the daily S2 and the ATR projected low. Now, we want to see pullback, I would say, because we have also weekly S2 here. So that could be a bit of a hinder. Something like that would be the best. So the Euro yen I would put on the watch list as well. Otherwise, it looks very bearish because we have moving at the pivot points above us, and we have also very bearishly aligned moving averages. So that looks pretty bearish, in fact. Of course, we've already fallen a ton, but who knows? A few more pips to the downside is always possible. Pound yen is retracing. Odd yen is bullishly aligned. $15-minute too, but boy, oh boy, price action is pretty bad. I mean, pretty choppy. Look at that. That looks very complicated. In theory, this is looking bullish, but one might wonder how much space there is today. Looking at this, these levels look pretty tight to me. Talked about it yesterday already. This odd yen potential to the upside, and that eventually it did push to that upside that we were talking about. It just took a long time. I didn't have the patience for it. So I would still, it does have upside potential. It's just going to be probably a bit slower crawl. So if you're not in it, it's difficult to trade it. If you're in it, you can just trail stop it and let it push up slowly but surely. Probably that doesn't hurt, of course. But if you're not in it, it's difficult to get in, and especially upon the break and even the pullback. It's just not moving a lot. So I'll be careful with that one. Vigantas is asking about pound yen. Regarding the strategy, we don't have anything because the momentum is still down, but one of the two moving averages is flat though. But if price were to get up at these pivots, that looks like a good confluence right there. Adrian is asking about dollar CAD. Let's take a look. Potential break, pullback, continuation to the upside on the dollar CAD. I'm not sure. The hourly, okay. I'm not sure how you look at it. Maybe a screenshot would be better because I just don't see what you're seeing at the moment, I think. I do, what I see is this resistance line, but we didn't break that, so that's definitely not what you were looking at. It is true that, from a pattern point of view, one could be seeing a slight falling wedge here, which is a bearish signal. So if you're looking at this one, that could be a bounce indeed. But the problem is price already bounced here, right? At this spot. That was the bounce, not a break necessarily. That bounce is doing well indeed. Oh, you're writing potential. Sorry, I thought it already occurred. Right? I have to read better. No, that's true. Yeah, there could be a breakout there. I agree. That's why I was saying, indeed, take a look at the rejection here. But you can also twist it around and say, if we don't get a rejection, indeed, we could have a breakout. So I see your point. That's true. Yeah, it's basically a bounce or break spot, isn't it? Either we bounce for more downside or do we break for more upside. Both have potential to be traded. Both have their opportunities and their disadvantages. Today, I would be a bit careful with trading the break. But if it breaks, tomorrow it could be worth trading. Why do I say that? Because the ATR and the day R1, the pivot point R1, are pretty close by to the breakout. So when price breaks through it, I wouldn't expect too much upside still left for today. So, sorry. So that's why I would, if we do get the break, I would be interested, but more for tomorrow, personally. Unless I get maybe, if we do break a bit back and get a bit of a discount still, maybe up to R2, maybe, I don't know. But preferably want to be a bit more careful with that. If we get the bounce, we have a bit more space down to S2, for instance. So that's the good thing about it. That's why I was more concentrated on a bounce at the trend line for downside. Pound odd. Bearish aligned moving average, and it doesn't surprise us. Pound odd has fallen a ton, really a lot. Bearish moving averages, bearish pivot points in the sense that price is below those pivot points. A lot of momentum to the downside. 50-minute chart showing the same, but a bit of a pause because we just spiked up. So I have doubts that we'll see the follow-through that we're expecting at the moment. It could, but if it does, then I would like to see a break of these bottoms. A break, pull back, and go. So the pound odd could be on the watch list. It doesn't seem like it's going to happen very soon, but it is lined up. Anyhow, we have the news event still to wait for. Euro odd, same story. In fact, very bearish momentum. This has been falling like a brick already for a long while. I have actually remember taking a trade here. I should have been in that trade still, just got spiked out by the interest rate there, a bit unfortunately against my trading plan. If I would have followed my trading plan, my stop loss would have been all the way here at the moment, which is a bit sour, 250 pips versus about 30 reward. Oh well, okay, do 8-1. Does show the potential of sometimes of what you can sometimes achieve with trading stop losses, doesn't it? Anyhow, bearish moving averages on the hourly clearly. Yeah, so here, this is the better one even better than pound odd, I would say. A break of this bottom here plus a hook back looks good to go. So I'll put that on the watch list too. Pound CAD going against the stream. And last but not least, the Euro CAD. also going against the stream. Okay, so that's using the momentum strategy for identifying which hourly moving averages are looking bullish or bearish or having momentum, and if not, then skipping those. So that was pretty quick. So we can look at something else. But this was the main focus of the strategy. Nothing seems to be breaking at the moment, but that's something that you never can control. When you're waiting for certain criteria to occur, you obviously have a hunting, let's say a hunting time, right? If you're doing it differently, let's say you combine all your knowledge right here, right now, and you need to take a trade within the next hour, otherwise you're running out of time, then obviously you can't, that hunting time is less. But if you have a certain strategy, if you use more let's say a non-discretionary strategy, then you're waiting for certain criteria to be met, of course, like this, I want to see this, I want to see that. Then obviously not in every single point in time there's going to be an opportunity. You have to keep monitoring it and keep an eye, of course, when those conditions are met, and then you can trade it, right? If you're trading discretionarily, you can start at point A and know by an hour later by point B, you either have a trade or not, but you're mixing all that knowledge to make a decision. Now the disadvantage of that, the advantage is that you're not hunting and monitoring. The disadvantage is that you'll be tending to take a trade just because you want to trade, or it's not as strategic in a way as waiting for things to line up. So that was pretty simple. We can now look maybe at some other things. From a discretionary point of view, I'm curious to see if we get a bounce indeed here on this euro dollar at that 886 fib. There was a bullish doji on the 4-hour chart. Let's see if that could be the turning spot. So let me move to a different template so we can look at other pairs as well. One second, folks. Just needs a bit of time of loading, and then we'll take a look at the cat Swissy. Alrighty. So there it is. Let's take a look at cat Swissy. We got a bit of a bounce yesterday at the trend line I had on my chart, at least, like this. So we got a follow through of that right there, something like that. We did bounce a bit, not too much though, as expected, and then we got the breakthrough. Now looking again at the pullback, that doesn't necessarily translate immediately into an opportunity, I would say, because if you look, we need to check and double check if this is indeed a pullback or if this is just actually the last upside before we maybe get a bigger retracement. Moving averages are definitely bullish on the cat Swissy, on the hourly, that's for sure. but we're seeing definitely some struggle here at the R2. So let's take a look at the 4-hour. It's struggling a bit at last week's high, so I would be cautious at this point. If you look at that particular fact, those weekly highs are always important, and price is right there, so we could see a bit of a struggle at this spot. In this regard, I would not look for the pullback. Price is too close to these resistances, and I would just trail stop any current open trades, but not add any trades on this pullback. Yeah, because we got those resistances too close by. I mean, you could put a fib on this, but those targets are intertwined with those resistances. I know it's a very small fib. It could work out. I just don't think it's worth the risk probably at the moment. Let's take a look at the 15. No, I don't think it's the risk worth the risk right here. It is at HD short, so maybe it could be bouncing off the broken resistance, but other than that, I don't really see much extras. What I don't like about it is this moving out, is this AO going back to the zero line as well. That's something that isn't good for a pullback trade, right? You want strong. This is retracing. That's not really a good point for pullbacks. So that would be the main reason. Let's see if there's anything else going on. Pound Swiss is getting some bounce to the upside. Does have bullish moving averages at the moment. So this could be actually a potential break, pullback, and continue trade, I would say. Now what I'll be looking for is price to make a small pullback, get the continue there, and go up. That could be good on the Pound Swissy. So let me put that on the watch list here. The Aussie is also finding some follow-through against the CAD. That's about it. We can take a look at others still. If you have a particular pair in mind, let me know, okay? I can still take a look at that. Otherwise, I want to show you something, maybe something new I was looking at just for the fun of it. We can take a look at that. But first of all, let's take a look at the Aussie because Kevin has a question. So bear with me, and then we'll take a look at that element I was looking at in developing. Just a little more for fun, an exercise for fun, but still we can take a look. The USD is getting some follow-through after these engulfing twins. I was doubting for a second, but the strategy actually requires this top to be broken because we already had a trade set up here. We are getting close to doing that. Target 94.50. $94 is probably going to be a target as well, and if we continue 94.40, that's the 4-hour. Let's take a look at the daily. Daily could have a bigger fib, potentially. That could be even 96.20, in fact. the daily. The weekly or the daily too, if you put the fib on this daily downside, we could see 95.20 is the 78.6 fib. 96.40 is the 886 fib. So yeah, there's definitely good potential here on this odd USD, I would say. If you look at the daily chart, you know, depending on how you trade it, but if you put a stop loss below this yesterday's low, that should be safe. And if today's candle closes anything like that, you know, you could trail stop today's low and continue like that. You know, trail it by 10 or 15 pips under the low, and you can see every day it has higher highs and higher lows, so that trail stop wouldn't be too bad. So it depends exactly on the parameters, Caleb. Can you maybe tell me when you entered, what price, where the stop loss was and is now? With that info, you know, it could give you a bit better feeling if you should continue or not. Okay, yeah, trailing stop is good indeed. You can always trail stop, for instance, these 4-hour bottoms. Let's see. $93.66. Okay, well, I'm not sure. Yeah, I mean, using that trail stop makes sense to me. So, you know, what exact trail stop depends on you, of course. Obviously, there's no right or wrong in that regard. However, using a trail stop, I think, always makes sense, or most times. So, just don't trail it too tight. That, you know, you have to find that balance between tight but not too tight. Moving it, for instance, now to 93.77, 8 pips below this 85, obviously doesn't provide any chance for the trade to continue. Then you might as well, you know, that's what I mean. But I'm sure you know what I mean. So, good. So I was just, otherwise, if you have any particular pair, let me know in mind. Otherwise, I don't think I saw anything else that is worth discussing. Maybe there could be some price action signal on a higher time frame that I didn't notice. If you want to take a look at that, we can do that. But otherwise, it's all, you know, either retracing or waiting for the break. So there's not, in this strategy, as I said, there's nothing really currently going on that is worth discussing, I would say. No. So with that said, I was just for the fun of it, basically looking at potential strategies, new strategies. This is just like a creativity exercise. I don't have any data. I don't have any back testing done. Nothing. Just the process of creation. And sometimes it's just fun to play around with things. So don't take this too seriously. It's just for fun, and maybe you'll take away some things that are useful. If not, no problem. Once again, if you want to look at current price action, let me know what exactly you're interested in, and we can take a look at that. Otherwise, I just want to show you what I was looking at. And it's pretty interesting, just from, as I said, not from the fact that I have any trading results with it or something like that, but just how you could create strategies that are pretty simple and look pretty interesting. But once again, I don't have any concrete results in that. But from a quick review of that, it looks pretty interesting. It looks worthwhile to at least take a look. So what I did was, for the fun, I was looking at indicators, which, basic indicators that make sense to use, and I was playing around with the Ichimoku. I thought, take away the Chinku and the Kumo, and only leave the Tenkan and Kyun, because they are pretty interesting moving averages in a way. They react a bit differently than a moving average. They're more they are more vulnerable to volatility, right? Than a moving average. Moving average will smoothen out everything. They're not smoothing out. These spike along kind of with price, but when they are trending, they are normally speaking aligned. So the advantage of that, moving averages, you have to look at the angle. Is it flat? Is it angled? And in that regard, they sometimes have that difficulty of interpreting that info. With this, you can even have flat levels, right? So there's no volatility. It's very clear. It's just 100% flat. There's no doubt about it. Where moving averages, you're always going to have, usually speaking, some angle or a bit of angle, but how do you exactly interpret what angle is good or not? That is the difficulty with moving averages. The Tenkan and the Kiyun could be totally flat, and then there's no doubt about it, right? There is no volatility at that point. There's no momentum, I should say, actually. There could be volatility, in fact, but I mean momentum, right? This is a clear downside momentum. They're both angled to the downside in most cases. When it's flat, like here, we see a lot of flatness. Well, you can see that that particular part is not interesting to trade. So I found that particular part of the Ichimoku quite interesting, but the whole Ichimoku, fills up your chart quite a lot as well. So this gives you a balance and provides the advantage, a advantage at least, an advantage compared to moving averages. So that was the reasoning. Then I added 2 parabolics, and that's it actually. It's quite a simple strategy. Let me know what you think about it. At first glance, obviously. I'll one day, I don't know, within a month, do back testing of about 50 trades maybe on the strategy and see what kind of results we get. But for the moment, I don't have that. Then we had 2 parabolics, a 2 and a 5. My goal is really to keep it as simple as possible. So in that regard, you can see it looks a bit crowded, but there are basically 4 things and 3 indicators on it, right? 2 parabolics and the Tenkan and the Kyu. Now, I was looking at it from a 4-hour perspective. So let me zoom out. So what is the idea? Well, the idea was I was looking at the information, and the idea is that this is a random example. I didn't look yesterday at the Yatswisi. Okay, so I'm not trying to cherry pick anything. I'm open to any critique because it's not like if this strategy were not profitable, it would be horrible. I have no idea. Could be a loss as well. But the idea is that the Tenkan is above the Kiyun, or that would be the trend basically, the trend definition, right? One above the other, but also that the Tenkan primarily, not the Kiyun, but the Tenkan has an angle because I want to see momentum. When that is true, when they're aligned to one direction, and the Tenkan has a momentum to that direction. So let's say an upside example here. We have Tenkan above the Kiyun, check. Tenkan at an upside angle, check. So we have a momentum to the upside. Okay. What we're then looking for is either the 2 or the 5 value parabolic to be broken. When that breaks here, that's the trigger or the entry. So that would be the entry right there. And we trail stop it until we get the crossover. Well, the trail stop, we can have a lot of methods for trail stops, right? This is just a example. But I thought maybe this example does allow for big runs. If you want to be a bit tight in the trail stop, you could use the parabolic, but you'll get a bit, earlier exits. I was thinking about just using the key and Tenkin for an exit. Crossover again to the opposite side, which is actually happening on this candle, plus a close of the candle below the Tenkin, which actually happens here. So that would be the exit right there in this example. Let's say the entry would be upon the candle close that hits the parabolic, which would be here, right there. So it looks like a 150 pip gain. The stop loss would be below the bottom, which 4-hour bottom, which would be here. So it looks like about a 33 pip. That's a good 4.8 to 1 or something, right? So that was a good example by coincidence. Now you're going to, of course, never be that perfect, obviously. Nothing is, but the entry would be here. My point is basically is that that sometimes you could just use a couple of things, and it doesn't have to be that complicated even, right, to find swing trades like this. It's on the 4-hour chart. How long was the trade? 7th of May to 19th of May. It took 12 days, but still was going our way. Now, I wouldn't be necessarily against moving the stop loss below fractals like this, by the way, but you would get exited here in that case if you use this one. Then in that case, the exit wouldn't be too far off anyhow where the Tenkin cross happened. But so let's see, I got some comments. Bob is a follower of the Ichimoku. That's cool. Didn't know that, Bob. That's interesting. Do you look at all the entire indicator, or do you only look at parts of it? Kaylin is saying odd use the daily time frame chart would be a nice example because the Qn is really flat. Okay, we can take a look at that. Yeah, it takes a lot of screening indeed, definitely, Bob. I agree with you on that one. So this is the idea. Let's take a look again where we have, now we have a bearish point. I'll take a look at the USD in a second. What we're looking for, just to clarify, where we have a bearish trend, right? What we're looking for is the parabolics to be broken. So there's no downside trade on that one, unfortunately. Let's see. We have the parabolics broken here. So you might think, hey, that's an entry. But no, it isn't, because the Tenkin is flat. You see? So that's why we, that would avoid this break, because we're getting a retrace, but basically what happened is that the retracement and the downside follow-through don't have the momentum, and we still get a bigger retrace. So we nicely avoid this one. That's the beauty of it. We're going to get across to the upside side, and here we have a good example of a good breakout. Why? Because the Tenkin is above the Qn, and the Tenkin has an angle. And then we push through the parabolic. So that would be an entry right there. Stop loss below here. And if we wait for the crossover, the exit would be, that sometimes happens. That's why I think probably the best for the equity curve, because when we have the crossover, it happens here again with the close. So we only made 5 pips, which is not much compared to the 40 risk. So it's about a break-even trade, isn't it? Although we were up all the way up here, we were up 75 pips, weren't we? We were up almost a 2-to-1. So we gave away a lot of profit. That's the only disadvantage when you wait for a crossover back to the opposite side. You can sometimes catch 5-to-1s, but you can also give away 2-to-1s that go back all the way to break even. That's the disadvantage. One way of doing that is splitting the trade in 2 parts, saying, okay, half of it I let, trail stop like that, the other half I take off with 2-to-1. Or the other half, I'm a bit more aggressive in exiting. exiting at a certain spot. So let's see. Here we had a bearish. Here we had, let's see, yeah, we had a break of the parabolic, but the Tenkan is flat. You see that? So no trade to the downside. Here we have, this is an example, again, of a good one, though. Why? Because we have the Tenkan above the Kiyun here, and the Tenkan at a upside angle. So again, we were able to filter out the downside twice, 2 losing trades filtered out, 1 big win for 5-1, 1 what was it, 0.2 to 1. So 2 wins so far. Then we have here a trade, break. The stop loss would have to be, well, it depends how you look at it. It could be below here or it could be below here. And we're still in that trade, right? On the odds, we'll see to the upside here. Swing trade. So these are just a few examples. But this is what I did, something like this too on yesterday. And it looked pretty interesting. It looked like it was worth testing more thoroughly. We can take a look at the odd USD. But does it make sense, the rules? Do the rules make sense? Are there any questions maybe? Is it something you find interesting, or is it not so interesting? You can use the same, of course, with those moving averages I talked about. But this is just a different spin to it. As I said, the advantage is that you kind of get, you have an idea if the breakout is going to have some decency to it or not, I think. That's what I like about it, just by looking at the Tenkan. So what you basically have with these two tools is you have trend in one, using the Tenkan and Kiyun. You have a filter with the Tenkan at the same time, which is like, it has two specific roles in once. And the parabolic is like a breakout measurement. Instead of using a trend line, you use the parabolic, right? Because the trend line, the trend line is going to have difficulty sometimes, maybe with drawing it. Trend lines are great, but you just don't have always a trend line. Right, parabolic will always have a value. So in this case, we had a breakout here. Now, if you wait for the close, unfortunately, sometimes you get a bit worse price, as you can see here. So the odd USD break would have been like this with the stop loss below, and you're still in that trade. It's up about 1.1, isn't it? Actually, there was an add-on. That was the first entry right here, right, when we broke these parabolics. The second could have been actually here with the stop loss below here. So let me make the stop losses red, otherwise it gets a bit complicated. That would have been a scale-in, in fact. So that's the second one going our way, I guess. Not as much as the first one, obviously, but at the moment, we have a fractal actually right here. So I would say that both trades could be moved into profit. If we put a trail stop right there, the trail stop below this bottom, I think it makes sense right there. You locked in a profit on both trades, in fact, right? Nothing wrong with that. We don't have the crossover as yet, but maybe at the beginning to take the risk off the table, one could be using fractals, but when the trade really goes a lot, then you can start using the key unit and Tenkin, for instance. These are things that could still be discussed. It's not that 100% fixed as yet. There's still things that could be discussed and changed. But you can see that this would be the setup on the odd USD at the moment. From the 4-hour perspective, from the daily, let's take a look. So this was the most recent breakout trade to the upside. Let me take those away. Daily chart. Yeah, the key unit is flat, but what I'm primarily interested in is the Tenkin, and that does have an angle. So we did get some good angled upside here. We also had a break of the parabolic. So if we'd use that strategy, it wouldn't be a setup because they're not aligned. That's the only thing. So I got some comments in the meantime. Let's take a look. So Bob is saying that he finds it interesting enough to try it out. Cool. It's a minor adjustment to his Ichimoku strategy anyhow. So that's good. Great to hear that. Yeah, I think I would be curious to if anyone is interested in testing it with me. We could share test results with each other. If anyone wants to join me, let me know. I'll write my email here. Go faster anyway, like that. So we could if we have multiple people who join, we can collect data a lot faster. We can make a research team. If you'd like to join, I mean, no obligation, obviously, but it would be easier to team up because we just can do more things faster in the team. Let's see. Otherwise, Vigantis is saying generally every strategy is okay, just if you test it and keep the rules. Yeah, that's true. Following the rules up, yeah, very important. Definitely. I would actually even add to it that it's very important that the strategy matches and meets your trading psychology. Is it something that you find pleasant to trade? Is it something you can naturally follow without too much stress, for instance? Those are also good things to keep an eye on, definitely. You definitely, I mean, not every strategy I would say is profitable, though. There are strategies out there that break even, just don't have that punch as much. So I wouldn't say that everyone is just as good, though. But most importantly, I do agree is that they match up to psychology and what you're looking for. Sorry, the psychology plus the rules. So you see, Kalen, what time frame are you looking for the strategy? I was thinking about 4 hour. 4 hours seem to be optimal because it's more like a swing strategy. 4 hour looked great to me, but I don't know. I think that if it's a good strategy, probably every time frame would be okay. So I think even the hourly could work fine. Let's see. I mean, you got a good example right here, right now, right on this Aussie here. That was a good breakout trade. And let me show you where exactly, right here. This is just a random example. It's the first one I saw. And we had crossover here, but we didn't have the close below it, as far as I can see. Or we did. Maybe we did. Sorry. Then the exit would have been here. Otherwise, the next crossover happened here, and it's not that much better. So here we had again a breakout though. Everything was aligned. Still be in that trade. That was yesterday. Right there. Let's see. Let's try to find a losing example. Otherwise it seems like it's perfect, which it isn't. There has to be some losing example. Maybe here we have them aligned. This is the hourly, mind you. We have them aligned, and we have a break through the parabolic. So if you take that close, but it would theoretically be a break, but would anyone sell on a pin bar like that? I don't think it's really realistic, although it does match the rules. So I don't think it's really realistic. That could be a filter. I mean, if you have a breakout candle like a pin bar, well, Doesn't look that, so we could add that to the filter list because, but anyhow, if you would, that would have been a loss, but it doesn't seem really realistic to me. But, let's see if we find something more realistic. Here, this one didn't do well, the hourly, because we had everything aligned. We had a bullish angle on the Tenkin very clearly. So this would have been a loss. That's clear. Yeah. So there's a loss example. And they're going to be bound. There has to be some, of course. Many are filtered out, though, just because the Tenkin is flat, or they're not aligned as yet, or they're aligned, but you just don't get pushed through the parabolic. And then you get a new trend already back to the opposite direction. So, yeah, you do get quite a lot of filtered out. That's good. You see here, for instance, flat Tenkin, two filtered out. This one breaks, and the Tenkin has an angle. So this one indeed went. So that's good. This Tenkin, it's really piqued my curiosity. Here's one that has everything aligned. Didn't go all too far though before, you know, we actually got downside. So this was, depending on how we trill stop it, you know, that depends how aggressively we want to be. If you use the fractal, could be close to break even in fact. Well, anyhow, this is, I'm already backtesting a bit too much. I don't want to bore everyone. Let's see, Vigantas is saying, for example, put on this template, your old template, and we can compare it. Okay. Let's see. And Kaylin, I will test and let you know, because anyhow, I look at Ichimoku. Yeah, definitely. It's great, Kaylin. That's awesome. Yeah, anyone who wants to, I mean, if you wouldn't mind, Kaylin, then sharing it with me and maybe even others, then anyone who wants to do that, just send me an email. It would be great to take a look together. I think the 4 hour is 4 and 1 hour. 4 hour looks, I would think, well, probably both will work, I guess. Let's see. Yeah, you could even think about that indeed regarding the crossover in the next time frame. It is something to think about. It doesn't necessarily have to filter out. What I've noticed though with that, I see your point, but sometimes you actually, if you would filter out this one, for instance, right? What I notice sometimes is that a higher time frame could filter out a short like this. That could be extremely profitable sometimes because the upside like that. So it depends. I get your point though, and I tend to do that too because when I use the hourly moving average aligned, sometimes I'm filtering out good 15-minute. When we have a downside on the hourly moving averages, sometimes I filter out good 15-minute upside moving averages momentum, in fact. So, but I get your point, definitely. It's something to look into, for sure, I agree. We can take a look at that. Let's see, this is the audio, is the 4 hour chart. So this is how the Tenkin look like. So we can put the moving averages now on. 1 second. The parabolics and Tenkin were saying an entry here in the 4 hour chart. And you can see that we don't have the Camarillo levels at that point in time, but the moving averages were very bullishly aligned at that point on the 4 hour. We're getting but it's difficult. It's more difficult to measure the difference between these moving averages, I would say, right? But they are getting pulled away from each other there. I would be more looking at the hourly with these moving averages. So let's take a look on the hourly. Yeah, you can see here they're very nicely pulled apart. So to me, that's a good 1 hour momentum strategy, momentum swing. And if you're trading the 1 hour, 4 hour combination instead of the hourly 15, then these are breakout trades to the upside indeed, when you break these tops right here. Now let's put the Ichimoku on it indeed. And zoom in here. Oh, there it is. What's it saying? So we have moving averages gradually at the upside. You see the Tenkan and Kiyun are acting a bit differently here in that choppiness. Although moving averages are pointed to the upside, the Tenkans are kind of like intertwined and flat. You see that? And then upon the breakout, though, the Tenkan does get the upside spirit and does have a bullishly alignment. And then, if you look at it from that perspective, it's actually a nice confirmation of the fact that the moving averages are getting a widening gap. So it's pretty good confirmation, I would say, of the breakout right in here. Let's put parabolic on it. Parabolic also gets broken, the faster one, at that breakout candle. So if you don't take the break of these tops, then you could wait for the breakout candle, which is a good candle, by the way, and the entry could be at the close with the stop loss below the bottom for a good breakout trade. And if you trail stop it using the Tenkan and Kiyun cross, then that would be, it's difficult to say, maybe here. Let's take a look. The Tenkan is 93.35 and the close is 93.35, so it's equal, so we'd still stay in that. Here, this candle. So that's the exit right there, officially. So that trade would have given 47 pips versus a 20 risk. 47.20, that's 2.4-ish, I think, isn't it? 2.35. So that's good. And that's the breakout candle. If we take the breakout itself, maybe just a tad better, but I don't think it's really relevant that much. So let's see. The parabolic I was using is 2 and 5 because sometimes the 5 is slow and then you don't see this breakout. And then the 2, you do see it. So I have both. I was thinking both for this strategy. So I thought it would be prudent to discuss it here. It's a strategy webinar anyhow, right? Wednesdays is our strategy focus. The main focus will be on that moving averages, but we can discuss anything regarding strategy, right? It's a strategy webinar, so hope you find it interesting at least. And let me know if you want to join our strategy research team, I guess, and we can take a look at this together. In any case, thanks for spending your time today with me. We'll be back tonight, in fact, and then we'll take a look at, what he's going to look at. He's going to take a look at the Camarilla and compare it to other indicators, so hope to see you then. Tomorrow we'll be back with the live trading lab, and in the evening we'll have a pro learning lab. So tomorrow tomorrow morning and tomorrow night. We still have webinars, and hope to see you then. In the meantime, good day and good trading, and see you soon. Cheers.